Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. I'm going to give you the forecast for this particular week, 10th to 14th of October. And today we are on 11th October. During this Asian Session Live Market Analysis and the Forecast webinar, I'm going to explain to you the forecast for this week and also the levels in which the currencies are expected to swing in this week, and briefly touch upon the trading strategy, what we should do during such volatile time. Last week, many of you would have got surprised because of the month beginning volatile moves. And also it was quarter starting time. So the players made a huge drop in the case of GBP and the gain in the case of USD and also moderate drop in the case of euro, and they accumulated the buy position. And yesterday, they had, even though the non-farm payroll on Friday was less than expected, but they made a gain nominally, and again yesterday they made the week beginning false move on the downside. Then when they made about 100 pips drop, immediately people would have got really jittery and thinking that other majors do not have any scope of gaining the levels. But gaining and losing the levels in other majors is being done by that of the players. And it is not the currency on their own they try to become strong or weak. So we need to understand they are all static object. And the players need to make it dynamic by making such moves. How they are making the moves? They do the circular trades and gain the levels or lose the levels. And as a result, you come across knee-jerk reactions appear to be happening in the market. So ultimately, what the players do is they induce the traders to make distress trade during that of the month beginning and the month end time. So this quarter beginning time, that is October first week, they wanted to position it and accumulate as much position as possible to make booking during that of the year end time. So for that, they made huge drop in the case of euro and GBP, and also in the case of GBP, people thought that it might go to parity to that of euro, and that is how they created the feel. And then subsequently, they started gaining the levels nominally from 1.20 area to 1.24 area. Again, made the drop of 100 pips, and that would have really made the people that any rise we should sell. And that is how they create the market sentiment and act against it of the traders. So hence we use the hedge order to limit the risk during such volatile time, so that we'll be able to really capture the profit on the downside, or simply keep stop at entry in the hedge, so that once the market comes to that of the hedge, and it can close the hedge, and we can keep 30 pips below another hedge order and continue trading rather than getting struck with the position. If you are hedged and the market has dropped far away, then we can simply close the buy position and maximize the profit on the sell position. And if it is hedged, the difference will be still 30 pips or 60 pips if it is second hedged. Then in that case, if market drops another 60 pips, we'll be able to have a break even. And once they drop more, we'll have the profit. So we need to follow the trading strategy. And there you have to take a wise decision how exactly you're going to do it. So once you follow the forecast, also the market reading to fine tune the forecast and that of the trading strategy, irrespective of the market condition, you'll be able to continuously earn money from the other market. So these three components, namely the derived forecast and the market reading, are pertinent to that of the forecast and fine-tuning of the forecast. Then the trading strategy is the one which is most vital and which is going to limit your risk and maximize the profit. Now the forecast for this week. And yesterday, 10th of October, They made the slide during that of the Japanese session, and then rise from up and again made the slide during that of the US session. And again today during the start they made this drop in the case of Euro and GBP. Nominally you can see that GBP has dropped about 40 pips, the Euro has dipped about 1 or 2 pips, and then they gain nominally in the case of USD and also CHF. As far as the commodity pairs are concerned, Aussie has made a drop of 54 pips, but in the case of Canadian dollar, it has gained only 13 pips. USD CAD has gained only 13 pips. So they are making variable moves against US dollar. So even though they are showing US dollar gaining move to start with, but of varied degree, they are trying to do it. And then today they are expected to firm up towards or rise towards the close of the Japanese session, and then firm up during that of the European session and make another slide during that of the US session, or a sideways move. Then again on Wednesday they are expected to make the swing and slide during that of the Japanese session. So it will be more of a lower level consolidation, and then swing and rise during that of the European session, and then firm up further during the US session. Then on 13th, they will make the dip and the rise, swing and slide, and then swing and rise. So on Thursday, they will start gaining the level from that of the US session, and then Friday, they will continue to gain the level. So this way, they are expected to gain the level slowly after accumulating buy positions. Then afterwards, next week, we'll come across the monthly trending time, and then the market will all show the contrarian move. The USD weakening move will be done by that of the denominator, and USD gaining move done by that of the numerator. So, USD weakening move by that of the numerator, and USD gaining move by that of the denominator, like USD and USD CHF and USD CAD. So that sort of moves they are expected to make during this week and the next week. So keep in mind that till Wednesday they are expected to make the swing and slide, and make gaining of 100 pips and drop again, gaining of 100 pips, drop again. That sort of moves they are going to do it, so that they will accumulate more of the buy position, giving the feel to the trader that once it gains, you have to sell so that you will be able to book nicely the profit. Once they do 2 times, then the traders commit 3rd time after the rise the sell position. Then the players continue to gain and trap them. So ultimately, you have to read the intentions of the players and then try to take the positions so that we'll be able to really book nice profit. And also keep in mind the trading strategy is very, very vital during such big volatile moves, especially month beginning and the month end time. Many of the traders get struck during that of the month end and the month beginning time because of the big moves they do it. And you know, the players are here to earn as much as possible from that of the market during that of the month end, and also during the month beginning time. They make some extreme moves and induce the traders to commit wrong positions. So when GBP made the drop to 1.20 last week, and then immediately the traders are forced to close any level sell positions, even the any level buy position at the bottom, especially in the derived market. So that is how they make such extreme moves. So in the derived market, derivative market, you find the futures and the options. The margin call will come to that of the traders, and also for that of the exporters and the importers. When the forward cover requires more margin to hold the position, then the traders will be forced to close the positions by that of the banks, and that way they make huge profit from them. So initially in the banks you come across, the traders are all given that impression that if you go in for a forward cover, your equity loss will be protected, your profit will be protected irrespective of the currency fluctuations. But subsequently, when the market goes against them, then they have to cut loss. And so what they are supposed to earn money, they lose instead. So that is a way, and the financial market, the structuring of the instruments are done. Thereby, when the traders are not smart enough, or even the exporters and the importers are not smart enough in understanding the market moves, then they tend to lose heavily the money. So here, in the name of protection, they make it as a trap. So you have to understand how structuring of the financial products are done. Then only you will be able to understand how the trapping is being done in the market as well as in the banking sector. Because if you want to earn using money, you have to be cunning. So you have to talk as if you are a so close friend, but actually you have to stab at the back. And that is the way they try to make money from the traders, the financial institutions, and also the players. Now, these are all the levels in which the currencies are expected to swing in this particular week. And euro came down to 1.1120 and the expected low was 1.1175. Quickly they will gain the level and over around there, and slowly they are expected to gain to 1.13 area. And in the case of GBP, 1.24 was expected low, but they came down to 1.2302, and slowly they are expected to gain the level, and they are expected to go to 1.28, and followed by that, they are expected to go to 1.30 and above after the week following it. So here, they make use of all the uncertainties and try to drop the market, especially in the case of GBP, creating the feel that this instrument is not going to be traded afterwards, and that is how they give the impression to that of the traders. But subsequently, the players need to have the instruments in the market and they need to manipulate the market. Only then they can continue to trap and earn money and sustain their world number one, world number two positions. So their greed is unlimited. So automatically you find such moves might appear. That is the end of the currency, but they are going to continue to rig and give surprise to that of the traders. So keep in mind that such quick moves or false moves in the market, then only you will be able to understand that how you can do the bottom fishing. Use the hedging strategy to limit the risk. Then you will find that trading is an instrument, is an interesting aspect. Then in the case of yen, from 102 to 104, they are expected to swing. It has already come to 104, and slowly they are expected to come down, and that will give the trigger for euro and GBP to go up. Then in the case of CHF, 97.25 could be the low. They came down to 97.72, and 99.52 could be the high. It went up to 98.41, and slowly they are expected to gain the level and then make the slide. Then in the case of CHF, they have been hovering around that 1.32 area, and then slowly they started making the slide using a different story in the case of USD CAD, and they are expected to come down some more, start gaining the level again when euro and GBP are gaining it in order to handle the commodity crosses like euro Canadian dollar, GBP Canadian dollar crosses. They handle it heavily by making such contrarian moves. And in the case of Australian dollar, they just made the drop from 0.76 area to 7.543, and then they will start gaining the level above that of 76 and would go to 77 area by weekend. So week beginning, they just made the drop and continued the drop, and then they will pretend to go up. Then immediately people think that, okay, we can buy after the rise. Then afterwards they will drop again and induce them to liquidate the long position. Then the traders will think that, okay, there is no point in going long. It is better to short the market. So that is how they create the market sentiment. Only then the traders can be trapped again and again by telling different stories. Now this is the market reading. So we note down the initial lows and the highs around 3:30 GMT and try to find out where exactly the market is making the move. And euro formed 1.1120 as the low, 1.1141 as the high. Here it shows yesterday's high of 1.12 and they are not breached low or the high. In the case of GBP also, they are not breached the low or the high. Then yen also, they are not breached the low or the high. Then Swiss franc 98.2141, they are not breached low or the high. And also in the case of Canadian dollar, they are not breached the low or the high. Then Aussie also, they are not breached the low or the high, indicating that the market is really subdued at the moment and they are not breached the low or the high. They are simply holding it for the second day, expecting the traders to take some wrong positions. Then later on, they are expected to show the true color. Now the trade recommendation, you can take a buy around 1.1125 area in the case of euro with 1.1187 as the take profit order and 1.1080 as the hedge order to limit the risk. And once they start gaining the level, you can just keep stop at entry. And this being the second week, you can do the position trade and try to maximize the profit using the trailing stop in profit making position. And in the case of GBP also, closer to that of the low, you can take a buy 1.2306 with 1.2368 as the limit to start with, and 1.2270 as the hedge order to limit the risk. And once you start gaining the level, you can make profit. And in the case of yen, you can take a sell around 104 and it could come down to 103 area. Once it breaches 103.58, immediately that will give us the trigger for euro and GBP to go up. And later on, they will come to 103 or slightly below and then start gaining the level in the case of USD yen. So either way moves will be seen in the case of USD yen, whether you have a buy or a sell position. If you simply hold, you'll be able to book profit. When the profit is seen, immediately keep stop at entry and then try to use the trailing stop to maximize the profit in USD yen. And they will continue to make either way moves in the case of USD yen, consolidate around 104 to 102 area with plus or minus 20-30 pips on the upside or the downside. And so watch that carefully and try to capture good profit in USD yen during this time frame. Then in the case of Canadian dollar, they are expected to make a quick drop and they could come down to 1.30 area. Then you try to buy and they will continue to gain the level again to 1.13. So these are all the recommendations I have given for the intraday trade, and you can try it in a demo trading platform and then understand how exactly you can take the trading decisions, even though the market appears very volatile. So these are all the time frames for the sessions, and this month, October, you will come across by end, the daylight saving system will be off in Europe and US. So watch carefully, and then I will show you the next table by next week. There you can see how exactly the time zone get altered or the time frame get altered with regard to the 3 sessions of the day. Okay, if there are any questions, I can answer those questions when they are asked in the questions window. Okay, Kim has got a question. Was the flash crash a large stop and or only due to lesser liquidity? It was due to lesser liquidity because what they do is they use the all or none order, a specific type of order as 1.20, then immediately it will be searching for the orders in the market, because they have to really create the panic condition so that the distress selling will happen. So they had done the trigger that way, and afterwards start accumulating all the cells slowly. So what they had done, they dropped it up to 1.20 and gone up to 1.22, again made it to 1.21. When they made the swing like that, people would have thought that GBP is going to crash very big. So those who are holding long position, even those who are holding the currency as without any leverage, they also liquidated the positions out of fear. So many people think that, okay, we'll liquidate and buy it when it further makes further drop, but they make such quick moves mainly to induce the traders to liquidate the long positions, and later on they don't give buy opportunity. You have to buy it at a higher level, and once you buy it at a higher level, they will discourage you by making another 100 pips. So from 1.20 they gained up to 1.25 almost, and then from there they dropped it to 1.23, and this is what normally people call it as a 50% retracement, and then start gaining the levels. So this is the way they try to manipulate. So one need to understand. More than that of the liquidity part of it, it is just to create the market trigger by extended stop, and also they are very smart. When they make such a drop, immediately world over you will come across the panic grip in the markets, and everywhere people will make distress trades. See, when GBP has come down, probably they will suddenly jump into gold. Suddenly they will go to the stock market, and so all markets will try to spread the fever. This is the normal method by which the players handle during that of the month end and the month beginning time, especially during that of the quarter start time. They wanted to accumulate huge positions during that quarter start time, so that is why they had done it. By September end, they liquidated most of their positions and lightened them, and then October they started buying for this last quarter of the year. Any question, please? And also they know very well that non-farm payroll this time will be less than expected. So they made the quick drop before that. So people thought that non-farm payroll might be very, very robust. That is why suddenly GBPs made that drop. So based on that, nobody wanted to take the risk, further risk, holding the positions. So many of the traders were holding huge loss making positions, they cut it with the further loss. So when the traders trade without stop, this is what they do it. And when the traders trade with the stop, they hit the stops very frequently. So what else the traders can do? So only option available is use the hedge in order to limit the risk, and also use it as a trading strategy. And many people think that if it is hedged, we are struck. And it is something like a brake is available in a car or in a vehicle. It doesn't mean that once you have applied the brake, the car is going to stop permanently. It is only a temporary stop. And then you will be able to understand whether you can proceed further or reverse a little bit and then proceed further. You will have the time to judge how exactly you have to maneuver the vehicle. So hedging is very similar to that. So understand the usage of hedging and try to open trading account that of the platform. offering the hedging facility. Any other question, please? So if there are no questions, probably I'll just review the forecast again. They are expected to slide till Wednesday. Today is Tuesday. Till tomorrow, they are expected to make further swings on the lower level. Okay, there is another question from Jason. Are we expecting Euro and GBP moving to 1.40 level and 1.30 level respectively in the coming days? Yes, slowly they are expected to gain the levels, and the visible gains will be seen after that of the US elections. So normally the players wait for the outcome of the elections, and they have got certain understanding. It is very vital because it is equal to that of insider trading, and in that process they should not lose their money. So they try to develop certain understanding with that of the newly forming government, and then subsequently they start manipulating the market aggressively. So after the US elections, you will come across very big gains happening to that of Euro and GBP. Everybody will forget about the various setbacks, what you have seen with regard to GBP. See, it is not new to us. We know very well. So when Greece problem was highlighted, we thought that the euro is going to collapse. And then subsequently they gained the levels in the case of euro. Now it is a turn of GBP. And in the case of USD, they came down to 78, etc., 75. And they just made an unimaginable drop and then started gaining above that of 100 and went up to 112, 113, and then again they come down. See, this is the way they try to manipulate the market, make shift in trading zone so that the traders are really get struck with unfavorable positions. Only if you use the hedge, you will be able to immediately reverse your trade in the event if you are struck. And so otherwise you have to accept a stop and continue to trade if the hedging facility is not available. So you should have the mindset to accept the loss when the loss is minimal. Then you will be able to consistently earn money from the other market, even if you are not able to use hedging. But if you have the hedging facility, then you can easily do either way trade and consistently earn profit in all your trades. Now these are all the levels in which the currencies are expected to swing. Make a note of it. This webinar is being recorded and you can listen to it later also if you want, and then try to understand how exactly you can take positions at what levels, etc. Now these are all the initial lows and the highs. None of the currencies they have breached the low or the high, indicating that they are just consolidating. Till tomorrow they are expected to hold low and accumulate more buy positions. Test the patience. They will gain and again drop, gain and drop. So that will also give that impression to that of the traders. No more buying, and it is better to sell, do sell and buy trade in the market. So once they start doing it freely, then the players trap it. So these are all the recommended trades in a demo trading platform. So the session timings will change soon after the daylight saving system is off by third week. So I'll come on 14th of October, Friday, and give you the review of the forecast, what I have given it today, and you can understand how far the forecast is really helpful in taking appropriate trading decisions. Wish you all happy trading. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Friday and continue with the analysis of the market and try to give you more input on the market so that it can help you to reduce the uncertainty of the market. Wish you all happy trading. See you on Friday.